Good morning, everyone, and thank you to our Motivate events team for all those wonderful videos that were played there. It is a great pleasure of mine to welcome you all to the Gulf Business Breakfast Briefing. It's our third briefing of this year, and we're focusing on the topics of finance and FinTech and the future of these two spaces here in the GCC. So today marks yet another step in our commitment to fostering dialogue, innovation, and collaboration in the ever-evolving world of finance and technology. As we gather this morning, we are reminded by that video of the incredible journey that Gulf business itself has taken over almost 30 years. We've been at the forefront of business journalism for almost 3 decades, and we've captured the stories that shape economies, industries, and communities in this region. The GCC is a region on the move, from trailblazing digital transformations to setting global benchmarks in FinTech adoption. This is one of the places to be in the world right now. We're witnessing a paradigm shift in how businesses and governments are rethinking the financial landscape. And we're bringing today some of the brightest minds together here to discuss these topics and some of the key shifts that are happening in the market here. The finance and FinTech sectors are not just about numbers or algorithms. They are the backbone of innovation, supporting everything from startups to mega projects. And as the pace of innovation accelerates, collaboration, particularly between regulators, financial institutions, and technology pioneers, is going to be pivotal in building sustainable growth going forward. Our agenda this morning is designed to spark insights, inspire dialogue, and provide actionable takeaways. We'll begin with a keynote from our esteemed guest, Dariush Soudi, who will be sharing his unique perspective on innovation and leadership. Following that, we'll dive into several of our panel discussions, each featuring thought leaders who are shaping the future of our region. Before we begin, I'd like to extend my heartfelt thanks to all the speakers, panelists, and moderators who are going to be here today looking after this event. Everybody has worked tirelessly to ensure that this happens today. I also want to give a special note to our Motivate Books division, which has just launched the latest authorized biography of His Highness Sheikh Mohammed bin Rashid Al Maktoum. It's called To Be the First, and Robin Harvey, who is from our books division, is here if you want to have a chat with him. I don't know if Robin is in the room right now, but if he can put his hand up. So if you want to talk about getting a copy, he is your man to chat to. So we're going to start off the day by also reflecting on the legacy that Motivate Media has traveled over the last 45 years, and we're going to play a video acknowledging this milestone. So many of you might not know that Motivate Media Group turned 45 this year. It's an incredible milestone for a media company in this part of the world, and it's only going from strength to strength. So we're going to play a short video reflecting that. Thank you.
It's 1979.
And your host today, Ian Fairservice.
Thank you very much indeed. Okay.
This is when the UAE witnessed the birth of a new communication dynasty with the launch of What's On, the Gulf's first English magazine. And with it, the first stone of what was to become the Motivate Media Group was laid.
Welcome to Motivate Publishing.
In the 45-year journey between then and now, Motivate has never wavered from its own path of evolution and innovation. From print to digital, from local to global, from events to festivals, from cinema advertising to influencer agencies, from book publishing to podcasts, in-flight magazines, joint ventures, content creation, surface aerials, corporate partnerships, talent representation, and celebrity collaborations. We've been in good company along the way. We've stood on stage and celebrated the best of the region at our grandstand, industry-defining award ceremonies. We've grown our family, expanded our reach, and to you, our combined audience of millions, we say thank you for being part of the story. Our mission is, and always has been, to inspire, to create conversation, challenge convention, to communicate, innovate and motivate, always striding forward, always in reverence of the past. But what does the future hold? We can't wait to show you, and we'll be there every step of the way, ready to keep you motivated for whatever is on the horizon.
Great, so we're going to get things going and get things kick-started here today, and I'm going to introduce our first keynote speaker, who, as I mentioned earlier, is Dariush Soudi. Many of you will probably know of him. You might have seen some of the billboards along Sheikh Zayed Road advertising the Gladiator 2 conference. He's a renowned investor, global speaker, and I think motivational speaker as well. Dariush, over to you.
Good morning, everyone. I'm not used to speaking about FinTech. I'm more into motivational, and so you'll be glad to know you're not going to do the Mexican wave this morning or star jumps. So can we celebrate that you're not going to be doing star jumps this morning? I came here 15 years ago, penniless, age 44, and I couldn't imagine. Really, I've been the luckiest human being on earth to be in this country with such leadership. And I remember going for an interview, actually, at Motivate Media. And I didn't meet the chairman, but I remember my CV being passed on, and he said, hire him, he has a British passport. And I thought, maybe I'll go my own path. But this path has been nothing but miraculous. You know, nobody wants to talk to me, know me, speak with me, but through consistency and positivity and perseverance, now we have a movement of 9 million people worldwide. We started a movement, a gladiator movement, because personally I've had 2 heart attacks, lost a lot of money, and still here to tell the story. So I see myself as some kind of a gladiator. And we started an event in April with 500 people, sold out in 4 weeks. The response was amazing. We did some ads for last weekend, and 2,500 people turned up, which was absolutely incredible. We sold out, we sold our rights to 4 countries in last week. And I'm proud to think that we got something, a movement coming from Dubai that's going to spread across the world. So I'm really honored to be here. Thank you. Thank you. I did some research a couple of days ago about FinTech, and AI happens to be revolutionizing the financial services. It's automating processes, client services, improving decision-making, and it's constantly improving, and also fraud detection. I noticed we do lots of transactions abroad, and it could be large amounts of money or small amounts of money, but my name is Mohammed Dariush Soudi, and probably 50%, hi guys, 50% of my payments are put on hold or delayed, because of my name is somewhere, flashes somewhere. And I'm thinking this kind of payment transactions cannot continue. The technology has to change, because whatever regulators are in the US or Europe flag somebody's name and stop people like me trading as effectively and efficiently as I want to. So definitely AI is helping, and also I researched it, and AI is going to bring $170 billion into the banking sector over the next year, which is incredible amounts of profits. Decentralized financing, leveraging blockchain technology. Now we can actually purchase manpower and skills in Africa and send them money without having to do any form of explanation. Things can be done in an instant. So exchange of energy and money is going to be more and more easier done and instantly. It's challenging non-conventional banking. And I think we are, again, blessed to be in Dubai, where the government is pushing regulators to catch up with the technology. Where you in the West, the technology is happening and the regulatory bodies are catching up, and they just can't. They simply can't catch up fast enough. Open finance, data sharing, various products. Before, a finance company used to have a product and they couldn't share it. Now, data sharing is becoming more and more common. Regulatory frameworks are evolving across the world. to support secure and efficient data sharing. It's really important that the data is shared correctly. Tokenization of assets, this is something that I truly believe in. Many times we can't get into any products or buy any services because we don't have the finances individually. But now through tokenization, you can actually, fractional ownership is becoming more and more common, which makes liquidity, increases liquidity in the marketplace. Regulators need to focus on emerging risks, ensuring consumer protection, maintaining compliances while fostering innovation. It's really, really important that regulators catch up with what's in the marketplace. For instance, I work very closely with a company called AIX, and they've really changed my life, and I've been working with over the last 8 years building up some passive income. Previously, they were offering something like 25–30% a year interest on your savings. And often the case was, people were saying it's too good to be true. And the saying is, if it's too good to be true, it probably is. So people weren't investing as much. But as soon as the interest rates reduced, the company was making the same amount of money. As soon as the interest reduced, more and more people started investing. Sometimes we need to educate the marketplace and show them that it is possible to earn more than 4% a year, which is, people are brainwashed to think that's traditionally true. And the first thing they say is, what guarantees are there? And to me, in my humble opinion, banks are going bust all over the place, all over the world. So there's no guarantees. But I think we should be more open to earning higher interest rates, because there are companies out there offering 30, 40, 50%, but the entry level could be $40, $50 million to get in. These venture capital companies in the US, but you need at least $30, $40 million to get into those accounts. So I really have hope that the majority of people out there will start believing in the type of interest they can earn and not the traditional way. Over the last weekend, all I did was educate the market, educated 2,500 people in the audience. And at the end of it, and I promised the audience that I wasn't going to sell anything, but at the end of it, I just turn around and say, if you go to AIX, they changed my life. And 600 or 700 people ran to them. And that showed me that if you really want to look for investors, stop selling. Just unconditionally educate, keep educating, people trust you. When people trust you, they will come to you. We live in a world whereby people can research anything now, and they often know more about your products or services than you do. So when you go in trying to re-educate them about your products or services, we're often patronizing them. So my suggestion is keep educating, keep going, be consistent, build the trust, and people will decide to do business with you. I honor you. I thank you for being here this morning. And it's not my field of expertise, but I hope I shared some of my thoughts about the future. Thank you.
Thank you, Dariush. There was some interesting insights there, and thank you for speaking at our event today. I'm going to introduce our next keynote speaker, who is Ahmad Khatib. He is the Chief Business Officer at CFI, and he's going to be talking about some insights on empowering financial literacy. Thank you.
Good morning, everyone. Thank you for attending this business breakfast today. I will be sharing a few comments and I'll be sharing a few comments and thoughts related to financial literacy and how it is changing in the age of FinTech and the continuous development of financial products, access to financial products, and investment products. So until a few years ago, when we spoke about financial literacy, it was mainly related to how to save money, how to invest for the future, for retirement. That is still valid, still important. But now, in our day-to-day life, with all the developments that are happening, a lot of new terms are being introduced. Cryptocurrencies, Bitcoin, fractional investment, tokenization, like Dariush was mentioning. So it is becoming very important to have the minimum amount of financial fintech literacy to be able to understand the things that are thrown on us on the apps, online, internet, and everything. So in addition to the basic stuff, it's like I mentioned about investing, retirement planning, and so on. Deciding what products we want to use, deciding if those products are relevant to us, the people who are not specialized in finance, for example. It's very important to understand this. And we in CFI, we provide online trading services. As much as the development in technology helps us deliver our products, as much as it comes with a lot of challenges, because there are a lot of scammers because of the ease of interacting with people, can claim offering so many products. And anyone who is on any website or any app can see those ads that promise profits, that promise unrealistic stuff. And most of the people who fall for those untrue claims are really because of not having the basic financial literacy that is needed to understand that. And the thing is, it keeps evolving in this direction. Those are the basics, basic pillars of financial literacy: earning, spending, saving, investing, borrowing, and protecting and safeguarding, as I mentioned now. Those are some statistics about financial literacy. 33% of adults worldwide are financially literate. So we have 67 who are not. 57% of adults in the US are financially literate compared to 33% of adults worldwide. And this, in my opinion, is related to how much the financial ecosystem in general is developed in the USA from a long time ago. A lot of people are used to pension funds, how to invest in that, insurance products, and so on. And this helps in increasing the financial literacy with people. 35% of men and 30% of women are financially literate. Here are some things, some initiatives that we do at CFI to ensure that people who come to evaluate our products, if they are suitable for them, we make sure they have the proper tools in order to assess their capabilities, know what risk they are taking before investing. We do a lot of learning webinars. We write, of course, provide a lot of articles, videos. We do training sessions, and we do a lot of on-demand education in that regard also. This is what I was mentioning about technology bridges the gap in the accessibility, interactive tools enhance the understanding. And the tools are very important because the basic transactions that we used to do in a certain way until recently are now changing. Everything is being done with a click of a button, with a swipe of a phone. So it's very important to have the proper tools to understand that and be able to do what we do in an efficient way. We also plan at CFI to expand those initiatives into creating our financial academies in order to teach people, because this helps us not only in marketing our products, it helps us define and explain the risks and the legitimacy of the different companies that are in the field versus scammers, for example. And this is our mission, to passionately empower traders and investors with the most advanced, personalized, and accessible solutions, setting new standards through innovation, technology, and exceptional support, delivering more and better in everything we do. And we seriously invest in doing this. This is about our company. We've been in existence for 25 years. We have 12 licenses globally, 11 global offices. We're now 400 employees, and our products, markets we cover. Well, we have a lot of platforms, all of course on online. Some are applications, some are desktop applications. And we just recently had an agreement with Lewis Hamilton as our brand ambassador. Part of it is to really expand the access to financial education and financial literacy. Thank you very much for being here this morning. I will be in the panel after this one. Thank you very much.
Great, thank you so much, Ahmed, for that keynote there. And I'm going to introduce our first panel now, which is all about digital transformation and the future of finance in the GCC. And joining Ahmed on the stage, I'm just going to call all of the panelists one by one. So first is Nicholas Wright, who is the head of institutional sales at Saxo Bank. Next is Brijesh Shah, the Chief Financial Officer of APM Capital. Following him is Vijay Valecha, who is the Chief Investment Officer at Century Financial. Great. Thank you very much, gentlemen. I think we're just going to get everybody mic'd up, but while we're doing that, I'm just going to introduce the topic of this first panel, which is all about digital transformation and the future of finance in the GCC. And in this session, we're going to delve into how digitalization is reshaping financial services, market strategies, and the region's global competitiveness. And when I was preparing for this panel, there were some interesting stats and figures that I came across just about this region in terms of finance and tech. And one of those is that the underlying technology infrastructure that is being built here is immense. So latest statistics point to the fact that just this year alone in the UAE, $23 billion have been allocated towards ICT infrastructure spend, much of which is going to be used to underpin banks, financial services, and more. Then we've got the big tech players that are actually moving into the market here and supporting the financial sector. So Google, in the last 2 years, has actually launched some major cloud data centers in Saudi Arabia. We've had Oracle, which continues to expand their data center infrastructure across the region. And lastly, there's the broader push towards cashless transactions. So in Saudi Arabia, they are pushing to have 70% of all transactions be cashless by the year 2030 as part of their Vision 2030 goals. But all of this really forms the backdrop for what is happening within the digital and finance space here. And I think there's three core themes that I'm going to probably touch on during this panel. Number one is how this technology is enabling this new rise in the retail investor market here. Then I'm also going to look at the impact that this is happening on the financial sector as a whole and the opportunities that it brings. So before we do that, I'm just going to go around the panel so that everybody can introduce themselves. I'll start with the gentleman here on my left, Nicholas.
Hi, Nicholas Wright, as I was introduced. Thank you. I work for Saxo Bank. We're a 32-year-old investment platform, and our founder basically believed that we were FinTech before the word existed. So back in 1992, Kim and Lars in Denmark, because we're a Danish bank. They believed that technology would play a much bigger role in individuals accessing financial markets. And that was in 1992, and they built one of the first ever online platforms in Europe, along with E-Trade in the US. And Charles Schwab, we were one of the first in this game. And obviously, I think they've been proven right, as technology is and will continue to play an ever important role for individuals to be able to gain access to institutional type products, which they've never been able to before. So, that's me.
Hi, I'm Brijesh Shah. I work from APM Capital. APM Capital is authorized and regulated by Financial Service Regulatory Authority of ADGM, Abu Dhabi Global Market. We offer easy and affordable access to global markets, offering global exchange-traded listed derivatives and CFDs on equities, commodities, currencies. Our client can trade with us via CQG and MT5, and they can, and our own APM traders, they can execute their trades and monitor them via the three platforms. Thank you.
Hi, good morning. I'm Vijay, Valecha. I'm the Chief Investment Officer for Century Financial. We are actually a 35-year-old investment organization in UAE. We are one of the first ones in the country, and like Nicholas said, we also believe, we are one of the pioneers of FinTech in the region. We do believe definitely Saxo Bank has taken a lot more. I mean, they have done a much better job at FinTech, and just like UAE is coming up now in the digital space, Century Financial is expanding very, very rapidly in the digital transformation of UAE. Thanks.
Okay, my name is Ahmad Khatib. I'm the Chief Business Development Officer at CFI. CFI is a bit younger. We're just 25 years old, 26 years old. We're headquartered in Dubai. We have licenses in different countries in the region and outside the region in Europe. And we've been improving and investing in our technology infrastructure and technical products over the last few years. We aim to continue this drive to be always ahead of the market needs.
Great, thank you everyone. So Nicholas, I'm going to start with you. You mentioned a very interesting point about how Saxo Bank has always had tech as part of its DNA. So what does Saxo Bank make of the rise of the retail investor, particularly in this part of the world? We've got an interesting market here. We've got a lot of expats who are coming in. They've got disposable income. Then, of course, you've got people from the region itself who are looking towards new ways of investing. How are you approaching this market?
Okay, so we've always been B2C. That's in our DNA. So 60% of our revenues come from individuals. 40% come from empowering other institutions to do what we do. So what we've seen in this region, we've been here, we've had an office here now for 13 years, and obviously the population growth, the demographic changes are evident. But I think what we found was that the mood of the retail investor or speculator has gone two ways. You've got the type of persona that you get in the UAE or the GCC is fairly adventurous. They're looking to come here and build wealth. I think that's one of the motivators for coming here. So you've definitely got, and it's always been a traditional trading mentality. I think that also fits with the local mentality. So there's always been a trader, speculative mentality. And certainly that was what our platform, we catered towards a trading mentality. I'm talking about pre-pandemic. Okay, so the products that we were generating revenue from were very much FX, CFDs, futures, options, not the investor type products. What we've noticed during the pandemic is a complete shift in this region. You still have obviously speculators, but you're finding a lot more people wanting to build diversified portfolios, wanting to invest, becoming thematic. So we've seen really quite a change, or again, the trading mentality is still there, but with the demographic increase here, we're finding a lot more investors, people who actually want to build wealth, but also adjusted with risk, and to protect wealth. So that's one of the biggest changes.
And Ahmed, I want to get your take on this as well. Are you seeing the same dynamics that Nicholas has just mentioned? The fact that post-pandemic things have changed, people are looking to diversify their portfolios a lot more, and they're looking to tools like Saxo or CFI or Century Financial or any of these others?
Well, yes, we are seeing that in the region, mainly in the GCC, let's say, as he was saying. In other countries in the region, the shift was more into speculation in different ways. And we've seen a lot of changes post-pandemic, not only in how people want to structure their portfolio or their trading, in the profile, the persona of the people who are interested in investment or trading. We've seen a totally different type of people that never thought of getting into financial markets or investing before. And this keeps increasing. So yeah, the demand for different types of products has increased. It's not focused on one type of investing after the pandemic.
And Vijay, I just want to get to you as well, because obviously you're looking at things from a similar perspective, right?
Absolutely. We have seen a complete shift in dynamic, and in this part of the world, it's mainly because of real estate. So we have seen real estate really take off and, probably eclipse all other kinds of investments. So diversification earlier used to just be in the 4 major asset classes. Now it's also in real estate. Also, we have seen more asset classes being introduced in the recent years, thanks to technology coming up. So these new asset classes also increase the diversification. And if we see, we still don't know the correlations that these asset classes are going to have with the traditional ones. So far, it's a negative, sometimes it's a positive, so that diversification really helps nowadays. The more options people have, the more they can actually choose from. I think investor education obviously is one of the most important things that has been going on since post-pandemic. And I think during pandemic, people had a lot of time to actually reflect on their portfolios, understand what they need to do. And that has brought about the paradigm shift that we are seeing right now.
So, Brijesh, I want to come to you as well, because amid this setting that we've got here, it introduces some interesting regulatory questions as well, right? And obviously, from your side, as the CFO, you're looking at this, and I think probably wondering, can regulation be made more relaxed in order to enable a greater investment environment, or do you think that regulation where it is right now is okay?
The regulations needs to follow, because the innovations or regulation is always going to be behind, I believe. So one needs to keep in mind the new challenging environment, and so all the regulators needs to follow what news coming up. Obviously, regulators has always come up with the new requirement and everything. So one needs to be keeping in mind that there may be a new requirements to follow. So we need to have the use of the new technology to comply with the new regulatory requirements.
So Nicholas, I was talking to you before this session, and I think it was quite interesting because we were also talking about how some of the regulatory changes are enabling the market share. But I think it was quite interesting how you were saying that there's an opportunity for providers such as yourself to leapfrog some of the other counterparts that you have around the world. Can you maybe unpack that for us?
Okay, so these financial centers, and we'll take Dubai and Abu Dhabi as the example, they are new financial centers. And obviously we know in the traditional world of finance, we have very established centers like London, Hong Kong, New York. I think it's a combination of ambition, driven by governments here, and technology. And I think the two have come together. They really see themselves in this part of the world as championing the new financial world. Now, it's not clear where the financial world ends up. But we know there's a few battles going on at the moment. You know, one of them being, do we go down the crypto route? Do we go to digital central bank, digital currency? Do we stay with fiat? So there's a lot of unknowns out there. It's a truly exciting time to be working in the financial world, and tech is playing a major role. So yes, there is a huge opportunity in this part of the world where they have new people moving, they're new financial centers, they are embracing global regulatory standards, and they see themselves playing a major role in the future of finance. And that can be seen by FinTech hubs that have been set up here. That can be seen by regulatory sandboxes, encouraging people to move to this part of the world and innovate. And certainly we see that happening. We at Saxo Bank are empowering many of those FinTech firms with our platform, enabling them to, to basically build their services while having access to capital markets. So hugely exciting time.
Because one of the things that you've worked on there is the open API model, correct? Can you tell us what that is and what that involves?
I mean, I think we've heard Darius, I think, mention open banking. What is open banking? Open APIs. I mean, effectively, the world wants interoperability and they want integration. They don't want incumbent banks just keeping your information and not sharing with anyone else. Because what that does is that that totally disencourages innovation. What they want is an open environment where you have a bank, you have a tech, you have a vendor, and they can all, through APIs, integrate with each other in a safe way. And so Saxo Bank, 8 years ago, decided to provide every single aspect of our platform, of our back office, of our capital market infrastructure. We've decided that we would unbundle it and provide it to anybody that wants it through APIs. So what it means is a FinTech firm can build their service and then integrate with Saxo, whether that's to access capital markets, whether that's to access us as a custodian, whatever it is. So it basically means it's a pro-innovation move and key to the world moving forward, in my opinion.
So, Ahmed, I want to loop back to you again because Nicholas has mentioned some interesting points. You mentioned crypto earlier, the open API model, but there's a big elephant in the room, and that's artificial intelligence. How is CFI integrating artificial intelligence, using artificial intelligence to help online traders, investors?
Yeah. Now, the release of a lot of products related to artificial intelligence over the last 3 years, let's say, has increased the awareness and knowledge about its existence. And the awareness creates a lot of demand and questions by people or clients interested in financial products in general. We currently use some tools that are AI-based, some we internally developed, some using third parties, but we are investing in a longer-term AI vision related to internal efficiency in addition to capital market or financial markets in general related services that are based on AI. And again, the part related to regulation, part related to the support you see here in the UAE for new initiatives, how easy it is to start new companies in the industry, also helps us in what we want to achieve in the future, because investment needs a platform to access such resources. And I think in the UAE it's a great place to be in for those purposes in the coming period.
And Vijay, I'd like to get your take on how AI is changing your world as well.
Well, it's completely transformed how we work, how we do things. There was literally just 6 or 7 years back when we used to only be a CFD provider. And thanks to AI now, all our platforms are AI integrated. We actually help investors, educate investors through AI. We also try to diversify the investment. So a portfolio is as good as, it can stand a bad day, which is like how we saw the COVID days, the March 1 week that we saw. That diversification is very much needed. Through our AI platform, you can actually invest through InsurTech, RegTech. You can get into real estate fractionalization as well as CFDs, futures, options, pretty much everything through just the one platform. That really encourages people to, invest and diversify their portfolios. Also, we have actually seen, I'm always in touch with clients on a daily basis. And, the biggest fear that clients have when I'm meeting them the first time is they don't share their entire portfolio with me. Because obviously, nobody trusts a lawyer, nobody trusts a finance guy, nobody tells their entire portfolio. Coming AI, what happens is people actually put in their portfolio, get in a decent recommendation. It might not be ideal today, but it's getting better every day. I think people are more open to sharing things with a computer than with a human being, and that, I think, is definitely a game changer.
So do you think we can use AIs to replace our financial advisors then?
Absolutely. I see no doubt that this is going to definitely replace the financial advisors. In general, a financial advice is only as good as somebody can actually control you. Our job is actually never to tell people exactly how to invest or where to invest. Our job is mainly in this part of the world is to stop them from over-leveraging. The biggest problem is when people keep losing money. If you keep losing money on Ponzi schemes, is the biggest problem. At the end of the day, if you have a risk reward of you make 1% a month or you lose 1% a month, it's a fair game. When people start investing in products which will make you 2% a month but can lose 100%, that's a risk reward that should never be taken. So I think AI does a very good job in that.
So Brijesh, I want to come to you and just to build on those themes that have just been mentioned there. Obviously, Vijay has mentioned Ponzi schemes, for example. We know that technology is improving finance. It's improving how we trade, how we invest. But at the same time, there is this element in the background around risk and around trust. So in this new digital landscape, how do we build trust into the financial sector to make sure that it's more solid than what it is right now?
So, AI also helped us saying that we have made our risk dashboards, and so it helps us to find out where the market's movements are going on, where is price and MLOD. Some of our clients also have done AI stating that they do arbitrage between the two contracts, stating that they give the price and annuity with the AI. And coming to your points, like the trust factor, so it's all relationship-based game. So once you have the experience with the clients, how clients behave, what is his credibility, due diligence of the customers, and due diligence of the financial service providers, that is more in this is a requirement now so that a trust factor can be inbuilt.
Great. So I know, sorry, Nicholas, do you want to add on that point?
I just maybe want to come back on a few things that Vijay said. So there's no question I agree with Vijay that you can use IT and AI technology to replace human being to a certain extent. And if you look at globally, we're talking about an industry called robo-advisory, right? Which was the new way of managing portfolios, which was using AI tech to replace a human portfolio manager. And this was 5 years ago expected to replace the asset management business, to be revolutionary in wealth management. Well, what has actually happened is it has replaced many aspects of wealth management, but it actually hasn't replaced the human RM. And what we've actually moved to is a hybrid model where we're finding tech and humans are needed, because people haven't and won't give up to a robot yet. Now, in 20 years' time, maybe, with the next generation, maybe. But we're not finding that. We're finding that the human being is still as important as ever, especially as you go further up the chain. So maybe as a retailer with $100, you don't expect to have an RM covering you, and that can be handled by a robot. But when you start having a portfolio worth tens of thousands, you expect and want a human being there. So it was just a point I wanted to make.
So that's very interesting because there's two different classes of investors there. More of your retail investor actually who would go the AI route.
AI will cater totally to retail, and for the time being it will be a hybrid model leading to a human model. By the way, robos aren't even entering the sphere when you get up to private banking. It's still very much human-led advice.
That's fascinating. So, because we're on quite a tight time schedule, I'm going to open the floor to questions as well. I don't know if there's anybody who would like to ask any of our panelists a question. If you do, please put up your hand so that we can give you a microphone. I see we've got somebody in the corner there.
No one's making a move.
No, I was going to take one of mine.
Hi, my question will be, actually, it's not a question, it's basically the same extension to the replacement of human advisors or the robo-advisors. So I belong to the retail mortgages, and as a banker, I have noticed still there is some kind of sense that people want to and wish to deal with the humans, because we are coming from a generation of millennials who are still not accustomed to that, and Generation Z maybe they will be thinking about, like, we want to replace this for the robots. But right now, still the advisory part is important. My question will be to Ahmad Khatib also. From the perspective of segregating the Ponzi schemes, how an investor or a person who's new to the industry will be able to segregate that this robo-advisory is not something as a scam. It is something that we have to have financial literacy, but this is not something leading to the scam further. How we can segregate that this is related to me as an investor, and I have to get the relevant knowledge accordingly.
Okay. Now, the important part in financial literacy here is to be able to understand the things you need to look at in order to differentiate between a legitimate robo-advisor or a scam. This is your question, right? Now, of course, regulation is a major part in that, but not having the basic understanding of what regulation is, you might be scammed, thinking what you're investing in is actually regulated while it's not. So the more the knowledge and literacy about this is spread, more people become aware is the only way to do that. Now, the other thing is, when we spoke about scammers a while ago, we have to always keep in mind that always the development in technology helps businesses and also helps the scammers, because they can do their scams in more advanced ways. So always spreading the awareness and understanding of what new things are coming out, what needs to be looked at, is the only way so far to keep people aware of what they want to invest in.
Can I just make a couple of comments on your comments? First, I think absolutely spot on. So, the different demographics have a different appreciation for technology and a different trust level. We are seeing globally the largest transference of wealth in human history. It is something like $40 trillion will be moving from my generation or above to Gen Z, Gen Y, wherever we are. So until that happens, that is about to start happening. Until that happens, I think the human RM is safe. When we get to our daughters or grandchildren, it may be a different world. This is number one. Number two, in terms of robo-advisories and how can you trust one or not, I think the first thing, which is what Ahmed said, is are they regulated? I mean, absolutely. We have regulators here who are very strong, and we power, by the way, a robo-advisor that's, I may be not going to give them free sponsorship by naming them, but I mean, they're the best known robo-advisor out of the Middle East, and they have truly championed this technology. And it's funny how they started going after just normal people who weren't really in the financial industry. And they need so much scale to make that profitable. If you're taking very retail clients with small AUM, you need hundreds of thousands of them to cover your costs. And what we've noticed with this particular advisory robo here in the Middle East, they have gone up the food chain, and they are starting to offer more of a hybrid product and trying to get, maybe they're still catering to retail, but going more into affluent, mass affluent. So there's a number of trends happening, but it will be really interesting to see when this wealth transference happens, how much tech will come in, and whether that will be the door open for the AI technology to make a real difference in this industry.
All right, thank you. I think we've got space for one more question.
Hi, my name is Savan. I am head of marketing from Samana Developers. I have a question to the panelists regarding cryptocurrency regulation in the region. So I would like to have a comment on how is this regulation evolving while it's trying to find a fine balance between innovation and security, especially in this region. Yeah.
Can you repeat the question? That was not every.
Yes. So my question is, when it comes to cryptocurrency regulation in the country, the way the regulation is evolving in this field, how is it trying to find a fine balance between security and innovation?
What we believe is like crypto, there needs to be many more regulation. Like this region is being a forefront for allowing regulating the crypto, but there will be many new regulations will be coming in this space of the world.
I think we had one more question that we can. Sure.
Hi, thank you. It's been a very informative discussion. I'm next on the panel, but I just wanted to add on to the lady's sort of question, and I think fundamental, when you're distinguishing and trying to understand Ponzi schemes and tying in with education, fundamental is really dealing with a regulated, a regulated firm. And that sounds common sense, but in reality, the lure of somebody, offering crazy amounts of interest and all of that, and you will be shocked to see the sheer number of people who fall for these Ponzi schemes. So really, it's just the basics dealing with somebody who is regulated by, any of the regulators, and the regulators here do know their job. They're constantly audited. There's good oversight, and regulators have a lot of they are also looking at the technology that is being adopted, looking at all kinds of outsourcing arrangements. So yeah, I would say regulators in this part of the world are actually quite aware.
I'm going to say something that may slightly disagree with our keynote speaker earlier on, where if something looks too good to be true, so, there is a reason why that phrase exists. And while I totally agree, you should always look up the risk curve to get a better return on your money. You have to be aware that the more return you're being promised, the more risk you're taking. It's simple. That has never changed and will never change. To get return, you have to take risk. If you don't want to take risk, you invest in government bonds and you get 3 or 4%, and that's it. If you want to take risk, you can get better returns, but you take risk. Coming to your point, these regulators, and I completely agree with you, they've created sandboxes. So we work with these FinTech firms, these robos, and it's incredible the amount of regulation they're put under to prove their models, to really prove that they are robust, to prove that they can handle money. So I agree. You absolutely, if you're on a website reading about someone that's offering you 100% return, you know, in a day, the first thing you do is you look at the regulatory index and see do they have regulation? Are they registered at the DFM or the DHGM? If they are and they're offering 100% return a day, I would eat my hat. So I don't think you'll find that.
I think the first thing you do is clear cookies.
Hello, I have one question here, please. Last question. Okay, according to Mr. Dariush Soudi, as he said on stage, that some stuff that sound too good to be true maybe are. And according to you, you mentioned that there are a lot of Ponzi's and scams going out there, and we have to avoid them as risks. I have a question. How can we differentiate of something that is too good to be true, and it is, than something that sounds scammy and fancy?
See, it's quite simple, right? You know the risk-free rate of the markets. You also know what is the capital you can borrow at. If you can borrow money at 6.5%, 7%, and you can make 20% returns guaranteed, why wouldn't everybody be doing that? That is the whole idea of too good to be true. If you can borrow money at 7% and make guaranteed 20%, that means there's no real guarantee, because that's not really possible. Otherwise, the banks would be doing this. The banks wouldn't be lending money to me. The Emirates NBD would be just putting all their money and making 20%. They're not making 20% from me. Regulation is the most important thing you look at, because regulators are strict over here. Whether it's DIFC with the ADGM and ESCA, they are very strict. They are very good. So, you know, of course, regulators are behind the curve when it comes to cryptocurrencies, learning new technology, but that's eventually for the investor's safety. So if a company is regulated, it's definitely a check mark. If the company is not promising things which are too good to be true, it's definitely a check mark. The most important thing, you know, all these, whether it's DIFC, ADGM, or ESCA, they allow you to check the balance sheet of the people you're investing with. If we are checking the balance sheet of Apple before investing in Apple stocks, why not check the balance sheet of your broker? Should definitely be doing that.
Thank you.
Great, thank you very much. Those are all good points. I do apologize, but we have to, I think we could keep going on this session. I think it's been such an engaging one.
I just really want to say one thing to your point. Ask the company that's promising you, what are my risks? Because as Vijay just said, in order to get over an adjusted risk return, there has to be a risk. So he needs to be transparent about what risk he's taking in order to give you that return. That's what I would say.
Great. Thank you very much, gentlemen. It's been an absolute pleasure. Thank you for doing our first panel session. I'll now actually introduce our next speaker onto stage, and I think everybody can get back to their seats. Thank you very much. Thank you. Great. So, I'm not sure if that one is working or not. So I'm going to introduce our next keynote address to move things along. And I'm going to introduce Imran Farooq, who is the CEO of Samana Developers. Now, I've had quite a few conversations with Imran before, and personally, I think he's a fascinating individual who understands the intricacies of the worlds of finance and real estate. And I'm going to welcome Imran onto stage so that he can present his keynote. Thank you very much.
Thank you very much. Good morning, everyone. Thank you. So, my name is Imran Farooq. I'm the CEO of Samana Developers. And today we are here to talk about an outlook of GCC financial market, mainly development in Dubai. This is the table of content which I'll be covering today. So, real estate investment in Dubai, and as all of you can see the chart on your right-hand side, perhaps if it was zoomed in, I would say it was better, but you could see that Dubai is the best performing market in the world as per UBS survey between 2023 and 2024. And I must say that most of the Western market in the world are struggling today. So at a time when Western markets are struggling in real estate, Dubai has been the best performing market in the world with 17% growth. Example of Hong Kong, minus 13%, London, minus 1.4%, Frankfurt minus 1.7. So that's one of the reason why developers are doing so well and investment in Dubai is doing so well. Second reason why people invest in Dubai is high rental income. It's 7% average rental return. Obviously on villas it will be lesser, on commercial it will be higher, but average of 7%, which is almost double of the average what you get in a Western world. Thirdly, the favorable regulation. I don't know how many of you have experience in investing in Western world. So Dariush, UK of course, right? So the experience is pretty different compared to investing in a Western world compared to Western world versus Dubai. Dubai, simple ease of buying. You could be buyer, seller, brokers, do one meeting, 30 minutes, you could be out with digital form A, digital form B. Digital form A is to register the broker with the buyer, B is to register broker with the seller, and form F, which is a agreement, pretty standard agreement, buy, sell, price, property type, buyer's details, seller's details, and the commissions, all of the details. So once these financial information is done, you get an OTP, SMS, transaction is done. You don't need to engage into a lengthy procedure of solicitors here and there and show up to the trustee. So again, the regulation, it's a very digital and fast track experience to buy a property in Dubai. Besides buying and selling, ease of buying and selling, the tenant relationship is pretty simple. Tenants don't take you for a toss. If they don't pay, you register an online complaint. One hearing, either they pay you or they're out, they lose the possession. So again, that is attracting a lot of investment in Dubai. And of course, our silver visa and golden visa doing extremely well and have come at difficult time post-COVID. So that was a great move from the government. Golden visa has drawn in billions of dollars of investment in Dubai. And so 2 million property gets you a golden visa, and that 2 million does not need to be fully paid up. It can be a partial investment, so you can buy a 2 million off plan, pay 20% down payment, and get your golden visa right away. Other factors contributing to Dubai's growth, in Dubai's property growth is stable currency. We are always pegged to dollar, so the currency never fluctuates against US dollar. Stable and growing economy, very diversified industries, mainly dependent on tourism, finance, technology, and being a regional hub is obviously a big business for Dubai. Personal tax benefits, there's absolutely zero income tax in Dubai, zero capital gain, zero withholding tax, and ease of bringing money and taking it out of Dubai makes Dubai a popular destination. Okay, so Dubai total transaction 2023, 600 billion dirhams, which is about 160 billion US dollars. That's a big number compared to most of the global market. Total transaction, Jan to part of October, 435 billion. I think yesterday article has been released, $175 billion. So it has already beaten the 2023, which was a great year. So that number is beaten. So a lot of capital inflow is coming over. There is some change in tax regulation in United Kingdom. That's driving the funds also. And Dubai is a favorite place. So literally all the continents are investing in Dubai. So if you ask me the top investors, like for ourselves, sometimes they're Indian, sometimes they're French, sometimes Americans. So even US, which was not part of top 10 curve, this year has been a big contributor to Dubai real estate. Right, off-plan market is the biggest market share, ready versus off-plan. So off-plan is driving a lot of investment in Dubai, and the reason off-plan gets a bigger share is because anybody who intends to buy a property, let's say somebody wants to buy a ready villa for 5 million dirhams, they need to come up with 5 million dirham upfront, sell their property, whatever. So so they need to come up with 5 million dirhams upfront or do the financing upfront. But when you buy an off-plan, you pay a part of the payment, 10, 15, 20%, and there you go. Another thing is traditionally in a 12-month cycle, you pay about 25% 25% down payment, and if the market moves up 25%, you have almost doubled your cash, or vice versa, whatever the equation would be. Rental returns, as I said, long-term rental returns, 7%, average 7%. If you place your property in Airbnb, you would make about 12% on an average, so that's a very high return again. Bank financing available both for residents and non-residents. Again, another slide on off-plan investments. So down payment typically 10 to 20%. Sometimes it goes up to 50% also. Long-term payment plan, 5 to 10 years time. These are interest-free payment plan. Very convenient payment plan, 1% per month during construction, and goes up to as low as 0.5% post-handover if the payment plan is beyond for the off-plan post-handover. Okay, my final slide, role of blockchain technology in real estate. Obviously, smart contracts, it's not really readily available with most of the developer, but a lot of large-scale developer, including ourselves, are moving to studying and moving towards smart contracts. And these smart contracts are going to make the relationship between buyer-seller more smoother and more automated. So every time there's a milestone payment, automatically instruction will come to you. You may decide to make the payment online using FinTech and things like that. But the bigger thing is the fractional ownership. So the fractional ownership is the big thing which is going to change the way real estate, look and feel of real estate in next few years to come. And I don't think so it's going to take more than 2 to 5 years for fractional ownership to be available with each and every developer. And the fractional ownership makes real estate like any other commodity or stock, and it increases the audience broad base. So, and the minimum ticket size, let's say today is average ticket size in Dubai, 1.2 million dirhams, can drop down to even $100. So that's the beauty with the fractional ownership. So even young kids, you could start investing in your kid's name. And let's say if you're investing every month $100 for a 5-year-old, imagine the investment your kid will have in the next 20 years down the line. So fractional ownership works for every kind of age group, and it makes the whole thing convenient. So better in a financial world, ETF, electronic traded fund. So pretty much you can buy anything on ETF. So blockchain can help you digitalize create an alternative for ETF, and everybody can invest on a blockchain. So it's a portfolio diversification for small ticket size, and you don't need to be a millionaire, or you don't need to have a large income to buy a property through a blockchain. Thank you, everyone.
Great, thank you very much, Imran, for that presentation. And we're going to move now into our second panel, which is going to focus on why regulation must not lag innovation within the financial sphere in the region. And we already have one of our panelists on stage, Imran Farooq, and joining him it is Zoheb Hamirani, the CEO and founder of Original Bull and Bear Properties. I'm also going to call onto stage Divya Gambhir, a partner at Al Tamimi and Company, the largest law firm in the region. And our final panelist for this session is Dariush Soudi once again. Thank you very much. So, Dariush, I'm going to start with you again, and you know, obviously, I think you've kind of hosted big events here. You've had a long business career. You know, when you look at regulation and innovation, Why is it so important that regulation actually enables innovation, especially in a fast-growing business market like we have here in the UAE?
I think going back to the amount of risk you can comfortably take. Being an entrepreneur, I'm very open to a high amount of risk. So as an entrepreneur, you can be thick-skinned. And then I can recommend people to invest in certain criteria or certain businesses, but the first thing they want to know, is it regulated? So it's kind of a parachute to your investments. I think it's very, very important. At the same time, given the power of thought, and then sometimes you look at regulations and you think, but they're a bit old hat, and they need to move on with the times. Like, I've invested in olive trees in Georgia, and I've had returns of over 40% a year, and the price of olive oil has gone up, doubled in 1 year. So there's other sorts of investments that you can make. Very much property, you can touch and feel it. A lot of people are comfortable buying properties as investments, but I think regulations are really, really important that people can sleep at night, knowing that there's somebody looking after them and they're not going to get conned.
This is why I'm glad that we've got a legal expert in the room as well. Divya, we've had some interesting conversations actually in the last panel, and I think you built on some of those points around the importance of regulation in terms of creating and enabling and trustworthy environment. What is your take on regulation, especially when it relates to the financial sector in this part of the world? Because my personal view on it is that it's a very enabling environment. Wherever there's red tape, it seems to be cut. We've got, it's famous for we're famous for our free zones here, for the ease of setting up business. But what is your take on that general environment that we're within at the moment here?
Thank you very much. Having practiced in the region now for close to 20 years, I think, we've seen how Dubai has really and truly, evolved, like no other city in the world. And yes, I, do believe that regulation is very, very important. I mean, like Dubai, if you look at FinTech, FinTech has grown by leaps and bounds and is expected to grow over the next, couple of years. The way I see it, FinTech is not a vertical anymore. It cuts across all areas of, banking, whether it's in the payment space, securities. We've looked at robo-advisory when, a lot of the private banks, I think, probably in 2015, 16, there was just, a department there to seeing DFSA sort of issuing robo-advisory licenses a couple of, years ago, VARA being established. So in my opinion, regulation is very, very key, and I think UAE and GCC regulators and governments are aware, and they have made a lot of progress. But I think what is fundamental is that technology will always move at a very, very fast pace, and there will always be supporting gaps in regulation, and there's a reason for that. The very purpose, the most important thing for regulators is consumer protection. And to ensure that there is adequate consumer protection, to ensure that everything is covered and regulators are able to have, it's a tough job balancing innovation with consumer protection. There will always be, a lag there. But having said that, look at the last year. Look at regulators, in the last year. Open finance, we're probably the 4th country in the world to issue open finance regulation. eKYC regulations were issued last year. The UAE Central Bank is involved with, CBDCs, with other regulators, Project Enbridge. Central Bank has entered into an arrangement with Saudi Arabia, Project Aber. So if you just look at it, ESCA, just see the sheer, just not the number of CFD providers here, but it's all just technology. So ESCA has issued, just over the last 2 years since the rule book was issued, so many licenses. VARA, it was just set up in 2021. So the point is, there will always be a gap, but there has been a lot of progress made. And I think the most important, if I was to look at it in the financial space, is the fact that the government has opened 100% ownership in financial institutions, which was not the case, previously. And in terms of, I think, some changes that you could look at, it's an evolving area. I mean, it's fluid. The sector is dynamic. I think UAE especially is it's a very complex regulatory space. There are too many options. You've got 5 regulators. So I think what most firms struggle with is just finding that right, opportunity, where should we really set up. So I think in terms of change, what I would sort of recommend is maybe having a passporting type of arrangement that we see in some other parts, of the world, and maybe just unification of, regulators. But other than that, I would say that the regulators here are fairly progressive, and they're quite aware of what needs to be done in this space.
I think my key takeaway from that is that they're progressive, but you've got to know which regulator you actually have to adhere to, right?
Yeah, and these are all problems that are it's not just unique to this part of the world, but these are common issues everywhere. I mean, when you look at the regulation of virtual assets, it's the most established countries, like even, the US. Is this product a security? Is this a utility? Just defining those, those products and then providing legal certainty, it's a challenge.
So Imran, I'm actually going to come to you on this point because something struck me there. During your talk, you were talking about fractional ownership of property here. And I'm curious to know, because obviously now we're getting to the real estate end of the table here, but how is that space regulated? And I mean, what are you finding there? Is it easy to operate within the fractional ownership space here?
See, blockchain is very easy to operate. And the whole beauty about blockchain, it's open, right? And the regulation are not that much as of now, right? It's gonna change in future, and depending on which country you operate in, so it's wide open. Let's look at, my favorite take is Binance and Coinbase, right? If you look at the valuation of Binance, at peak point, Binance was valued at $80 billion, right? And Fab was planning to buy the whole Standard Chartered only for $21 billion. So they outbid, were paying a big premium, and the whole of Standard Chartered is worth only $21 billion. So yes, it is open. Yes, it is less regulated, but people, based on their performance, earn that credibility. Binance has earned credibility, Coinbase has earned credibility, and there are 100,000 other exchanges which may struggle, right? So it is wide open. So that's one point, that it's low regulated. So it's more of your reputation, your brand reputation. So if today people trust Emaar, for sake of discussion, right? If we bring, they're the largest property developer, and they have a huge market share. And Emaar goes in construction 1.5 years after selling. And there's nothing wrong with it. They build their cash flow. They have learned from their crisis of 2008. They want to make sure when they start the construction, they don't want to stop, right? So that's what I want to highlight. Low regulated, high on the credibility, and based on the turnover, people get the trust also.
So just to add, just from a regulatory perspective, because this is something that we get pretty much every week. We have somebody asking us, "Oh, I have this fabulous idea, fractional ownership in real estate," and we're like, "Okay, not so novel anymore." But just to add from a regulatory perspective, and we are aware of firms that are offering it, but from a legal perspective, the issue really is that the law that would provide legal certainty to title does not exist. So that's the lacuna currently, but our property team, our real estate team is in constant discussions with the lands department as well. And we do know that this is an area that the lands department is pretty actively sort of looking at. And because we know that this is an area that's of a lot of interest in the real estate space. And I think ancillary to that is rent now, pay later. So that's, we know that there are one or two firms that are offering it, but we do know that the central bank is open to having, because we're lawyers to the central bank, we work very closely with them. The central bank is quite open to having discussions on rent now, pay later. There's no legislation, there's no regulation, but you can always, the regulators are quite open to you meeting them and having that discussion to see how you can sort of progress your product.
Can you just explain that rent now, pay later concept?
So it's just pretty much an extension of buy now, pay later. So buy now, pay later has been around, you've probably looked at the likes of Tabby. It's been around for a couple of years now. But what's really happened is they were all operating under this gray area. There was no sort of legislation. And the central bank was closely monitoring, and everything was pretty much, okay. But this year, the central bank amended the finance company legislation and actually has formally introduced an activity catering to buy now, pay later. So it's essentially just short-term, it's just pretty much providing short-term credit solutions. And from what, I'm not a property lawyer, but from what I understand, you can really leverage, one check paying into, multiple installments, and here comes a FinTech firm. And if I remember, I think the name of one of the firms is Keeper. That's the firm. So, and I do know that there are, because, we've been working with a couple of others, we do know that this is an area that's of really growing interest in the real estate area.
So Zoheb, I want to come to you now, because I think we've touched on very interesting topics around real estate, which is your core competency and focus area, and how regulation and digital is changing it. I mean, amid all of the stuff that's happening, fractional ownership, the blockchain, properties even being put on the blockchain, these digital platforms that are also now being increasingly regulated here, fake listings being more closely monitored. How important for you as a business is this regulatory aspect to how you operate here?
First off, thank you for having me on here. The point that you mentioned earlier, which was a discussion, which was buy now, pay later, I think that was introduced a couple of years ago in this industry, as well as I think the whole concept behind it was to make it accessible to everyone to be able to own a home in Dubai. Also, touching on the point of fractional ownership, which was discussed earlier.
Staking.
Sorry?
Staking.
Yeah. So I think it's a concept that exists across the globe, and seeing how forward-thinking and advanced thinking our regulatory authorities here are, I think they'd be implementing that in very, very soon, as Madam over here mentioned as well. But it's good to have regulations, and I feel that with the way our authorities do think, I think they're going to do pretty well in the future.
Can I just add, staking license is in Dubai, and it's pretty much operational, and there are tons of companies doing staking with property, accepting minimum investment of 500 dirhams. So staking is a license. You could do it with any back-end technology. You could do it on blockchain, or you could do it the conventional way. So that pretty much exists, number one. Number two, the pink title deed, originally it was called about 10 years back, or a pre-uqud, it's called commonly now, is the buy now, pay later formula. So we do a 5 years post-handover payment plan. We are 100% secured, and the buyer is 100% secured. So what happens is, if you buy on a 5 years post-handover payment plan, we'll give you out keys. You will have a pre-title deed, and Dariush pays us upfront. We will convert his pre-title deed into a full title deed. So we lose control of that property. It's pretty much structured.
That's your Uqud document.
Absolutely. Uqud converts to pre-title deed once the building is ready, right?
Yeah.
So pre-title deed is post-handover payment plan, and title deed is a full
Once you
ownership.
complete, yeah.
So I've got a broader question around this, because we've seen with real estate companies here, there's the 1% plans, I think there's 0.5% plans, there's all of these, you've mentioned some of the posts or the prepayment options. Are the lines blurring between being a bank and a real estate company here, or developer?
Very interesting question, and my favorite subject when I started the post-handover payment plan. The whole idea of a developer becoming a post-handover payment plan is basically becoming your big brother and saying, stay away from your financing company, and we will give you interest-free. And what we are actually doing, see, every developer comes up their upfront payment. Land is fully paid up, all the architectural drawing, all the investment is done upfront. And we want you to subsidize most of the construction. And we're deferring our land payment, our upfront, any kind of upfront investment, plus the profit, and we let the customer buy gradually. Now, a lot of developers say, Imran, why do you do that? It does not make sense to us, and things like that. I said, listen, if 100 people can buy your property on a 3 years payment plan, I believe 300 can buy our property on an 8 years payment plan. It just opens up, and it's a beautiful product. So imagine our average ticket size is 950,000 dirham. One person per month is 9,500 per month, right? So anybody who has a salary of 18, 20,000 upward can afford a property, point number one. Number two, when we sell your property for 950,000 dirham, most of the payment plan is 60% during construction, 40% post-handover. So you actually do not pay that 40%. Majority of it is subsidized by your tenant, right? So that way, it's a win-win situation. You are in the money from day one, and it's easy on your pocket.
I think this is what has been interesting, because there's been innovation insofar as how one actually invests in an asset class like property. But Zoheb, I actually want to ask you, do you think that regulators are looking at this more closely?
Definitely, regulators are looking at it more closely, as we've also mentioned earlier that they are observing the global markets as well. And the global authorities, how they're taking a role and acting out on things like post-handover payment plans or fractional ownership. And what we love about the city is that the authorities here are really open-minded. They take into consideration everything, and they bring in their own innovative touch when it comes to implementing the same system here in our city.
So, yes.
Sorry to jump in again, but very, 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 very interesting, and, just pondering over your question on can real estate companies, are they really banks? And I think fundamentally, from, I would say, a regulator's perspective, a financial regulator's perspective, I think the distinguishing understanding is it really a financial product, or is it an extension of credit that's really being provided by the, developer? And I think partnerships are fairly common. We've seen the central bank being very, very open to partnerships. I recall working on, many, many years ago, BMW and some of the car manufacturers when they were entering, and they wanted to be able to leverage just not providing the car, but also being able to provide financial solutions, and how the central bank was comfortable but very clear that your job, you're not a financial services provider, partner. And I can't remember, I think they partnered with MAF at that point of time. It's all in the public knowledge. And so fundamental is, are you conducting your core activity, or are you sort of trying to do something which is beyond and therefore requires oversight? And I think the other area that I see pretty much in the real estate space is, we accept payments in cryptocurrency, and what does that really mean, for the common man on the, road? Am I really making payments to you in cryptocurrency? Is that what I'm really doing? No, you're not doing that. What in reality is partnerships between, and it's a very good partnership because it's a win-win for the developer and for an exchange, a crypto exchange. It's just a partnership. It's just a simple referral arrangement. So who's really, and that's where it comes to. It's the partnership. So who's providing the services? It's the financial institution. It's the regulated financial institution. Central bank is aware. And that's why, you see these things. But it's not really the developer who's accepting a payment in, cryptocurrency.
So, Dariush, I want to loop back around to you. It's been very interesting topics that have been spoken about here, but I think for somebody who is an investor, and obviously you've been in the market here for a long time, what is your take on all of these various investment options that seem to exist out there right now? I mean, you mentioned AIX earlier, for example, but I mean, there's so many others, right?
I'm a maverick, right? So, and out of 10 investments, 7 of them lose. But the 30% they make way outweigh the losses. So my openness to risk-taking is higher than most people. So please don't take my advice if you're going to lose sleep at night, okay? I can take risk on all my money and sleep soundly at night. So as an investor, you have to talk to as many people as possible. I think Richard Branson said is that the most complicated thing is to simplify things. If I was going to go to a developer and the developer is going to fund the product and get me to live in that apartment, live in that villa, I'll feel good that you have confidence in that product, that I'm going to be there 5 years, headache-free, knowing that you have your investment with me in that property. The same with cars. So when I see a 5-year payment plan by a manufacturer, I'll be thinking, they believe in their vehicles. It's not like an old Lada, after about 2 months of driving, it's going to fall apart. So I think if you can go into partnership with companies that are looking for investments, that's more security for the investor. I actually look for people who have skin in the game. That's quite important to me. Returns, I'm quite open to high returns and low returns, because the way I look at things is like, if inflation is running between 9 to 16%, and these professionals in the marketplace are offering me 4 or 5%, is that a good investment? Is my money gaining or losing over time? I got my 16-year-old daughter to invest for 5 years in a particular policy within a very famous bank. And after 5 years, and I was teaching her how to invest, after 5 years, she ended up with less money than she'd put in. And she looked at me at age 21 and said, "Dad, what are you going to do about it?" And so I tried to look at things at an angle and really use technology to its benefits. And there's lots of winners out there and lots of losers out there. Just spread your risk and make sure that you can comfortably sleep at night. But there's plenty of opportunity out there.
Do you interact with a lot of FinTech startups in this part of the world?
All over the world, actually. And yes, I do. Actually, most of my investments are in Europe right now, for whatever reason. Do you mind if I share a few with you? There's a chip manufacturer that is placed in, because the car parks are short of space in Europe. And then what happens is they have a chip in the space where a vehicle can park to go and watch a soccer game, and then the credit card of the driver is charged every time they use that space. So that's quite good. Also, I've invested in a company whereby they have chips within private jets. And 90% of the time, private jets are sitting in runways doing nothing. And this company actually places somebody who wants to fly within short distances in Europe and then rents out that space in the private jet. So I think there's opportunities everywhere, but you've got to look at it a non-traditional way. If it makes sense to you, take a punt. That's what I did. And it's worked well.
Right, so I think I'm going to open the floor for questions as well. I don't know if there's anybody who has a question for our esteemed panel on stage. I see there's one just down there.
So my question will be in terms of the rent now, pay later, or in relevance to the payment plan which the developers are asking also for the customers or the investors. This is one part, and second part will be about another aspect of FinTech integration. So for the rent now, pay later, or the payment plan offers which are offered by the developer to the investors, how impactful it will be on the DBR perspective of the customers. The reason being, central bank has came up with a regulation that is depending on 50% of your monthly income can be utilized for the liabilities, and the 50% remaining can be your lifestyle expenditures. So if we are offering these kind of rent now, pay later, or the payment plan options, indirectly we are actually pressurizing the customer's lifestyle expenditure part. And then they're prone to get more loans because they can't show to the banks that they are already occupying or allocating this monthly income towards those rentals or the payments and investment for the property. However, they are prone to get more loans. So how we are tackling that part?
I don't know what DBR means, but I understood what you're trying to
Debt
say.
burden ratio, which is
Debt
50% of your income.
Ratio, yeah. So zero impact, absolutely zero impact. This does not show at your Etihad Credit Bureau. So these are your private contract. It's just like you buy anything privately between you and your friends, so it's the same thing. So it does not, Etihad Credit Bureau does not show this as part of your loan. It's not a loan, it's a private buy and sell contract, so zero impact.
So what will be your stake? I'm keen to know as a developer. You are taking on actually the risk from the investors that you will be bearing all the costs. They are paying a fraction of monthly payments to you, but then you're actually giving a pre-title deed to them as well. So from the regulatory perspective or from the liquidating perspective, once the default happens, how the developers are making sure that their payments are not at stake? So are you going to sell it off properly and do something about it?
That's our confidence in our projects, number one. So we are very confident that the price we are offering to you, there's a real value in it, number one. Number two, we have a collection ratio of about 98%. So today, dealing with a 2% default, finding a replacement customer once our existing buyer is properly terminated by Dubai Lands Department, finding a new buyer is not an issue. In case of a bigger economic downturn, if the default rate increases from 2 to 10, we are mentally prepared to handle it. So we're pretty much comfortable with it.
Fine. One last question also, which is very critical. So in all these integration of fintechs with the developers or the partners and the banks from the regulatory perspective, the only one thing which I've observed is compromised is the PII, the personal identifiable information of the customers. The moment we as an investor or a customer show interest to any partner or any developer, or let's say the customer comes to the bank, we are trusting the bank our information is secured and it's not passed on to any third parties. But when the partnerships happen between fintechs or the developers and other companies which are emerging in the market, that data is compromised as a first instance because they are partnered further with those peer-to-peer lending and BNPL companies, fintech companies who have no control of safeguarding that personal information. How, being a developer, if you integrate with the bank, you'll make sure that this PII information is not tempered or compromised?
Okay, so we are the 7th largest developer in Dubai, holding a 4.4% market share. So we have best of the systems available where all customers' data is secured, even with our staff members. So information cannot leak at our end. There was an information compromise at some other level, which I don't want to name here, but that's not at a large developer. I don't expect top 10, top 12 developer to have compromised system or anything less than a bank, right? Because we do billions of dirhams of sales, right? So we have all the resources available to implement the right technology. So we don't. If you're dealing with a small developer, one-off building, obviously their data is on Excel files, staff has access to it, and things like that. We have Oracles and Salesforce implementation, and we're pretty secure. So I don't expect any data leakage to happen at our end.
Hi, my name is Dilip. I'm from DIFC-based Lamer Capital. The question to the panel is about the fractional ownership. So the regulations for the fractional ownership for the miners, what it will be? at the exit strategy actually. If the property owner wants to sell, or if the guardian wants to sell the property, the ownership is on the minor. What will be the implication at that point of time?
Staking is a industry in Dubai, and there are companies who specialize in staking, and there are laws governing the staking, and there are few large players also. Yes, it's at infancy stage. The volumes are not extremely high, but they're pulling a couple of millions dirhams versus mainstream developer doing tens of billions of dirhams, right? So that industry is developing. It's pretty regulated. I don't know the law for minor regulation for staking because I don't do staking. We have to move forward for fractional ownership on a blockchain contract, but that product will be finalized in a year or so. Yeah. Sorry.
I'll just add to that. On the regular levels where you buy a property as a minor with a guardian on top, the final decision is for the guardian, of course. So the minors are not in any position to make any decisions for even the regular properties. So I'm assuming probably moving forward, looking at things like stake, I'm assuming the guardian is the one who takes the final decision, if that answers your question.
So you're saying a minor can buy a property from us? Ukut can be done directly? I thought it's only in case of inheritance.
No, minors can purchase a property, but you need to have a guardian who's the final decision maker for it.
Right, any other questions?
Hi, so I just have one question for the panelists. We spoke in the earlier panel about how there are differences between different generations expecting different things out of different asset classes. And when it comes to either traditional ownership of real estate versus fractional ownership of real estate, do you think that since there is a lot of Gen Alpha and Gen Z and Zillennials and all these people coming into the market now, and like Nicholas said that there's this massive transfer of wealth happening, do you think that fractional ownership has the ability to take over traditional ownership in real estate, especially from a real estate agent's perspective?
I don't know if fractional ownership will take over the whole owning an entire asset by one individual, but it's grabbing a lot of attention and it caters to the masses. So I feel that, yes, it will probably come up to par, if not at least to a certain level compared to an individual owning an entire asset by himself.
Please go ahead, Serge.
I just think the new generation want more freedom. They don't want to be stuck in one place. They don't want to be stuck in one jobs. They want to be able to float and trade from anywhere in the world. So fractional ownership really helps. And they can go anywhere, and they expect to change jobs 20 times a lifetime. Unlike our parents, they'll be proud to have 1 or 2 jobs a lifetime. So I think fractional ownership is the future. And it gives the new generation freedom. And they can literally spread their money all over the world. That's my opinion.
So to add to Zoheb and Dariush, I want to say I agree with them, but at the same time, I have a belief that for every product to be pushed out, there needs to be serious sponsorship. AI, why it became all of a sudden so hyped up? Because there is billions and billions, hundreds of billions of dollars worth of stake for the company who wants to push it, right? The problem with, let's talk about Samana. The problem is my average ticket size is 950,000 dirham. Now dropping from 950,000 average ticket size to a 500 dirhams or $100 ticket size is very difficult, right? Mindset has to change, newer generation needs to come in. So you don't expect from mature developer who are moving tens of billions of dirhams a year to the same management to run the fractional ownership and do justice with it. So probably a younger generation needs to become, and developer need to realize that a 2% market share of fractional ownership is a lot, right? And a new department, a separate strategic department needs to be set up. It has to be a Toyota, Lexus kind of mindset. Then only this will be pushed. So if you ask us to conquer the world with fractional ownership, difficult.
No, I agree with what you said 100%, because especially when it comes to real estate, it's not just about buying into a particular asset class. It's also about emotions, and there's about, something about putting down your roots and buying a home. Like, buying homes for investment has only become popular, say, after pandemic in Dubai on an exponential level. But before this, like, there have been people here that have lived here for 30, 40, 50 years and still not bought their own house. So I guess there's that emotional attachment, which, of course, for the younger generation, it just becomes easier to sort of be able to have a house on their portfolio or have a real estate investment in their portfolio, but not necessarily a home. So I guess like a 2% market share even would change that dynamic quite a bit.
Great, thank you very much. I hate to be the chief interrupter once again, but I'm just going to ask the ladies and gentlemen to please give a round of applause for all our panelists. And I'll just ask everybody to exit the stage as well, please. Thank you. Move on to the next part. Thank you very much. Okay, great. So we're moving on to the next segment of our event today, which is a very quick recognition around some key game changers in the industry. And I'm going to welcome onto stage my colleague Mario Saibai from Gulf Business to hand out some of these awards. We've got 3 awards that we're dishing out today. The first one is for the game changer for the leading brokerage in the MENA region. And this is a company that exemplifies fintech-driven evolution of brokerage services in the GCC. It's CFI Financial Group. Can the team please come onto stage to accept the award? Great, thank you very much, Ahmed. So we're getting on to our next Game Changers Award, which is all about the real estate investment game changer. And here we are recognizing a company that has been at the crossroads between finance, investments, and innovation. It's Samana Developers. If I can please ask the representative to come onto stage. Great, thank you very much. A round of applause there, please. Thank you. We're getting to our final Game Changer Award of the day, and this is for the Women Business Leader. And this goes to a very special individual. So in the GCC, gold is more than just a commodity. It's a cornerstone for investment portfolios. It's a symbol for wealth preservation and a driver of economic activity. And this precious metal also plays a pivotal role in the region's financial markets. It is within this vital sector that our next winner, Amreen Iqbal, has carved a distinctive path through her brand, Piece of You. She has more than 20 years expertise in the gold industry, and she is our next Game Changer winner for Women Business Leader. Can I please welcome onto stage Amreen Iqbal of Piece of You. Great, thank you very much, everyone. One last round of applause there. And we are now moving on to our final session of the day, our final panel. Well, it's actually it's a fireside chat, and it's focusing on the rise of FinTech in the GCC. Can I please welcome onto stage Benito Mabel? He's the founder and CEO of Vault 22. And joining him is Alessandro Duri, who is the co-founder of Pemo. Great, thank you very much. Can we please give a round of applause to our next set of guests? Great, thank you very much. I'm just going to sit a bit closer, seeing as this is more of a fireside chat. But before we get into some of the questions around the topic, I was just wondering if each of you could introduce yourselves to our audience as well. Benito, let's begin with you. Vault 22, very interesting startup. Well, not startup, more of an established business.
Exactly. Thank you for having me. Name is Benito Mable, very new to Dubai, about a year. I lead a venture called Vault 22, which is a financial fitness platform. Picture personal finance management meets investment. So we're in the wealth technology category, and what we do is we aggregate all your financial holdings in one unified platform, provide access to goals, cutting-edge tools, where you can then invest for a better future. We describe ourselves as a fitness platform that allows people to live a better financial future. That's who we are.
Awesome, man. Alessandro, can you please explain Pemo to us? Is it Pemo or Pemo?
We go with both, like whatever you prefer. I go with Pemo, usually being Italian, I keep the E like this. But Pemo is a corporate card and expense management solution for businesses of all sizes. We particularly focus on trying to serve the SME segment, the growing SME segment in the UAE. So we provide wallets and accessibility to cards, to card, and basically like transform the way in which businesses control their spend.
And so obviously this session that we've got now is all about the future of FinTech. Both of you are in businesses that are breaking new ground in that space. Benito, I'd like to start with you because you effectively have taken over a tech platform that started in South Africa. It was known as 22/7 there. It was very well known for being a personal finance management tool. At the time when it launched, it broke a whole lot of new ground and was extremely innovative. It's been a couple of years since then. There's been a few owners in between. But, you know, is this the kind of market that could be hungry for a personal finance management tool, and why?
Fantastic question. It's not just hungry, it's starving for innovation and platform like ours. If you look at Africa as a whole continent-wise, there's about $2.5 trillion of individual wealth. It needs a place to invest. The infrastructure is not that great. South Africa specifically, we're not talking about a huge underbanked population, 85% are banked. Banks control pretty much everything. 22/7 was the goose that laid the golden egg. It was before its time, but this is the right time to actually scale this proposition, not just in South Africa, but globally. People have finances in disparate banks, multiple accounts, investments everywhere, but they don't have a unified platform that tells them where their money is. Take a globally traveled individual like myself. I might have an account in Hong Kong. I've lived in Singapore for 12 years. I now live in Dubai. I started in Canada. I was born in Ghana. I might have bank accounts everywhere, so I have a complicated life, right? So you need a platform that can really aggregate all your financial holdings in one unified platform that tells you where your money is going, what's coming in, but how do you plan for a future? Today, there's a huge advice gap in financial planning or wealth management. They don't even talk to an individual below 5 million rand, right? But they only see one part of the equation. With our platform, we've aggregated wealth to the tune of $3.2 billion in South Africa alone, which we see individual financial holdings all in one unified platform. Advisors will love this. is a game changer for us, and that's what we're looking to scale across, not just Africa, but across the world.
I just have to say, and this is not a personal punt of the product, but I haven't found anything locally here that actually matches what 22/7 now Vault 22 actually does.
That's true. Open finance, open banking is relatively new in the UAE. We would thrive in an open banking arena. By contrast, in South Africa, it's also loosely open banking, but we actually scrape the data, not the best way to do it, but we would love open banking to be an accelerated thing, to be a mandatory thing, so that people can aggregate their financial holdings in one place. We think the UAE will be a phenomenal marketplace for us to do this, and the regulations are changing rapidly, and we're looking to build an ecosystem of partners to facilitate our entry.
So Alessandro Benito is helping people on the personal side, so to speak, but your business is helping businesses actually bridge that gap.
It's a good parallel. Like, I mean, we started Pemo 2.5 years ago, like seeing a big friction in between, like how companies operate and how companies are growing in the UAE, right? So all the ecosystem of SMEs, 600,000 in the UAE, 1.2 million in Saudi, is like growing, like, and is actually the backbone of the growth of the country these days, right? These economies are becoming stronger, but the services that they get are not up to the speed at which they are growing. So this is what we have really noticed to be one of the big gaps, putting together like the backbone of their operations. What the bank does not offer them, what their ERPs and management software do not do that. So we put together a financial operating software with embedded financial solutions. So you open an account with Pimo, you get your wallet, you can empower your employees, you get visibility on how you are managing the business spend of your business. We give back time to the entrepreneurs, we give back time to the business people, we give control to the finance managers, right, to thrive and to keep up with the growth of that business. We do this also thanks to exactly the same pillars that Benito was mentioning. Growing regulation, ever evolving, better infrastructure. We start from a very big gap, so similar to what you are experiencing on the personal side, we also notice on the business side. I was also living in Singapore, and like where Singapore is like where I dreamed the UAE to be in the next 2-3 years, right? In terms of infrastructure, regulation, enablement of businesses or fintechs like us to provide groundbreaking services to the various segments that we serve.
That's an interesting point, because I think many would argue that Dubai is possibly trying to model itself on Singapore. So, I mean, there's still a gap that exists there?
Definitely. I mean, like, you know, when we started Pemo, there wasn't a regulation for what we do. 2.5 years later, there is like actually a very, very good set of rules. Regulators have kept up, like they invited us to roundtables to discuss how to do things and so on. If we take a parallel, probably Singapore took this road 5-6 years ago, right? Regulated early on, right? And this allowed the businesses to grow and enable. So we are getting there, and we are getting there very fast. And that's the most exciting part of the journey, right? Because you really feel that you are there as the train is really picking up speed.
So what interests me about both of the businesses that you gentlemen represent is that you both mentioned the importance of managing expenses, tracking expenses, and technology aiding with that. Is that sort of the kind of elusive sort of difficult goal to achieve for fintechs, particularly in a region like this?
I don't think so. Our main purpose is to help people live a better financial life. Tracking the expenses, know where the money goes. Maybe I'm spending more on groceries, but then I can benchmark people like me spend, 1,000 dirham on a particular thing, and I'm spending 3,000 rand. Okay, I need to figure that out. Now, I have a goal that I want to send my kids to higher education. I want to buy a house. I want to retire. I want to own fraction of a property, right? In the theme of everything, I want to invest in sustainable products. Well, if I lower my expenses, maybe I'll free up some cash so I can start putting it towards one of those goals. Today, financial advisors put all into one bucket, and if you need it, you take a piece out. No, we believe in having multiple goals at the same time and you can track them at the same time. And once you close off one, well, what a confidence booster, right? Child's education, check, done. Retirement, well, it's approaching soon, but the future of retirement has also changed, right? I'm not going to retire at 65. I'll work forever. I'll work till I die because I enjoy working. I enjoy building business. I enjoy doing this stuff. But that alternative lifestyle becomes a bit more attainable for the average individual.
Well, on our front is like what we thought we were starting doing was mostly like giving back time to businesses and enterprises, because these activities, these back office activities, are incredibly time consuming. What we realized we were actually doing in the first few years is we were giving accessibility to products that actually financial institutions nor their existing software were able to serve them. Like just the ability that you can in one click like provide a card to each one of your employees. And then all of a sudden, boom, like you've tracked everything that you were before, having a back office to set up, collect receipts, doing all these like type of like low value added activities. This one even before AI, right? Is like the reality of many businesses, and I'm also a business owner, so I also run this part of the business in the organization, is that so much of the time is consumed into this. So we thought we were starting from like, I mean, the aspirational is like, you know, giving these businesses the superpower to really run after their business and not on all the other things that actually consume the growth of a business. And I'm sure you know as well, Benito. But on the other end, we ended up providing accessibility. And there we see like, you know, the partnership with the banks to do something that the banks will never be able to do, right? But it's actually very close to it.
And doing it faster.
Much faster, yeah.
Can you tell me how many businesses have adopted PEMO as part of it?
We have currently more than 4,000 businesses just out of the UAE in like a little longer than 2 years. Like we onboard hundreds of businesses every month in a full compliant way, because we offer a product that is actually financially regulated. So it's like de facto we open them a bank account, right? And then businesses are now transacting 1.4 billion dirhams in annualized card volumes just in like a bit less than 2 years, which is an astonishing pickup rate. And what we notice is that, like, you know, when we compare, for example, our corporate cards versus an average bank card, our cards have a spend that is 6-7 times bigger than an average SME card. Why? Because we are literally converting cash spend into digital spend. So this is where we are like entering into the day-to-day life of businesses, right? And actually we are one of the big drivers of digitalization. If you think that a bank gives one card to the owner of every business in the UAE, but we have businesses that have 50, 100 employees, right? Too small for a big corporate bank to care of them, right? But too big for the single card to go around. So we enter into a very, very interesting niche, and that's for us just the beginning. We're gonna also power payouts, we're gonna power cross-border payments, and go and serve that in-between segment, which is actually very, very big in the region and growing, that now is desperately asking, because we have literally the queue of customers coming in, which is a good problem to have.
Fantastic problem.
So, Benito, I think you've heard how there's this, just in 2 years, they've notched up a lot of customers. Something similar planned for Vault 22 here?
Yes, massive. So Vault 22, our relaunch in South Africa just recently, we've grown to about 680,000 customers already on the platform. 250,000 of which have linked all their accounts and tracking their spend, automated budgets, 62,000 budget updates, and 100,000 investment accounts linked just recently. This is very promising. We're soon rolling out investment capabilities in the next few weeks. It's taken a long time to do that because we're not a bank. We're not traditional in any chance, so we need to build an ecosystem of partners to facilitate this. We work with all the asset managers in South Africa to curate products. So a lot of announcements coming soon, but there's a lot of excitement. We keep getting invited to new markets to explore how we could become a Pan-African business, but more importantly, in the Middle East, the reception has just been fantastic. So we're looking forward to launching here as well.
And I just want to take a step back and look at the FinTech ecosystem here, and I want to get each of your thoughts on what some of the pros and cons are, I guess, of setting up a FinTech in this part of the world. Obviously, it sounds like you can scale very quickly, Alessandro, but I mean, you know, in some respects, there's a lot of legacy here as well. What have you found?
Well, yeah, so I have to say that like one of the pros is that, as you said, you can set up quickly, and like, you know, you need to find the product where you can go to market. I think it's not a cons, but the fact is like we're in the FinTech business, and like when I speak with other buddies, co-founders in FinTech, we're in the business of compliance ultimately. And like the fact that like there is this misconception that FinTechs cut corners in between compliance, right? But now here in the region is like, it was very clear since the beginning, no, you need to do things right. And this is a bit of just a matter of like timing. So you need to work with the regulator to provide a strong and solid product. Once you have that, then you can work and accelerate and scale it, because yes, there is a lot of legacy, which, you know, it slows you down to kick things off, because it's not like, you know, plug and play APIs into a financial institution and whatnot. But once you're in, then you have a very big opportunity, because then you can go and like outgrow that legacy, right? And that's what excites also investors. Like we have managed to attract first-time international investors into the region, into our business on that type of proposition.
Look, for us, same, easy to set up, but building a business sometimes is slow. Understanding the ecosystem, who to talk to for different things. There are many regulatory or supervisory bodies you need to look at, digital assets, license for open banking, and the list goes on. The sooner we figure that out, the faster the business can scale. But we find this region very welcoming. There's a huge excitement here. Before, people used to come here, work for 2 years, 3 years, make their money and leave. It has changed. People are going to work here, they're going to live here, they're going to invest here, they're going to retire here, and the region is expanding phenomenally, like rapidly. So we're here for the long term, and those rails are beginning to come together for an ecosystem to really thrive in this environment.
And how key are partnerships as part of all of this? You guys have mentioned, you know, banks, for example, but I mean, how crucial is it to have the right partners in the room?
I can go first. Look, it's critical that we have partners, because it's all about collaboration. The established players, banks, asset managers, the markets, they will still be there. As a FinTech, I'm not going to replace a bank. But banking is happening outside of banks. Over 50% of wealth is held outside banks. We're calling real estate, gold watch, farms, you know, wine collection, whiskey collection. They're not in banks, right? Jewelry. So if we can aggregate that on our platform, we're actually serving a massive need. We've been lucky to be backed by Standard Chartered Ventures, Old Mutual in South Africa. We've got Franklin Templeton. And the list will grow, because we get problem statements from these people. They're also trying to serve a different need. They have customers, but they don't necessarily know how to get to those solutions. But experimenting with a FinTech or a platform like ours allows them to get insights and understanding how to create better products for the customers in the future. And that's what we're trying to do.
I mean, I underwrite word by word what you said. Like, it's critical, and it's very complementary to the existing, like, you know, financial network. Of course, it's challenging, like, because not always the partner is where you would like it to be, right? No, so you are the innovator, you are the guy that like has the flexibility of doing things differently, while, you know, the partner moves only when he sees a very, very big outcome out of it. And so cracking that component is probably the critical part, but that's where regulation is also coming into play, where they start creating, okay, we create a middle layer of like people that can operate at a maybe lower scale, with good supervision and then can work and enable. And it's very good to start seeing more and more of these enablers coming into the region, right, to be able to support this ecosystem. And on this one, I reconnect myself to the Singaporean model. That's what Singapore did very smartly early on. Got a couple of very good enablers, put them under a good regulatory framework, and this one allowed to bridge that gap. And then the banks picked up. So it's a cycle, we're getting there.
Right, so I'm going to open the floor up to questions as well. I don't know if there's anybody who has a question.
So my question will be regarding the collaboration of fintechs with the banking. For you, being a fintech, it's important for you to collaborate with the regulated financial institution, which is a bank. But somehow there is a roadblocker of the cost. That is an impact that is causing this collaboration not to happen so smoothly, or due to the PII, as I mentioned before, the data leakage kind of things and all. So how affordable the fintech could be for a small to medium-sized bank, for them to tie up with the fintechs in order to broaden their horizon as well? This is one part. And as an individual customer, how an individual who's about to start a company on their own can collaborate or can refer to any fintech company for their own financial benefits, from the individual aspect and from the lending perspective, from the bank's perspective.
So for us, collaborating with banks has been a difficult thing. Obviously, sometimes you don't speak the same language. I've been fortunate enough to actually work in banks and insurance companies, so I understand the language. The barrier usually becomes when you deal with the technology people. They think, oh, your fintech is technology. No, we're financial services. Let's talk to the business. We need a business sponsor. That collaboration is key to actually developing and scaling our product. You start with proof of concepts to pilots. So there should be no misunderstanding what the rules are for a pilot. If it's successful, then we can move to the next stage. Unfortunately, it takes too long for decisions to happen and to actually start the pilot. 6 months to get through a simple pilot contract with a major bank, because you have to go through risk policies, compliance stuff. It's a lifetime in a fintech, right? We can run out of cash very quickly, but we're trying to hit a certain milestone so we can raise funds to keep going, because we have the conviction to get there. So we do need banks or asset managers to sort of lower the barrier, create their own sandbox so we can experiment faster, but also getting problem statements for them so that we can build the right solutions. And it's a model that I think could work beautifully. And I'm happy to say that in the UAE, because it's also following other more mature markets, is actually leapfrogging and learning from those early mistakes that other markets have done. So yeah, UAE is definitely going to take off in a big way.
If I can add on the viability for a small, medium bank to do this, is if it's in the mission of the bank, if there is a big push, right, to try to do and collaborate, I think the parallel there is what happens to small, medium banks in the US. The small, medium bank of the US were the backbone of the first fintechs, right? Why? On the push that to change a community bank of some regional area, right, to do something different. Then they pushed it probably a bit too far, right, without enough regulatory oversight. But if it's in the mission of the bank, it happens. As a fintech, what Benito said is we don't have the time. So it's we cannot start a conversation to go poke a bank and say, hey, do you have interest in this? Because the answer is already in the fact that you are going out. If you are going out and approaching, it will never work. So we are trying to be there for them, right? But on the other hand, we need to be extremely pragmatic, because we have few big bets we can make, right? Exactly for the reasoning related to the funds to reaching certain milestones, right? So we don't have that beauty of time to take 6, 12 if we are lucky, but then more realistic 18 months to go through the process that the bank has. But it's possible. So as I said before, bridging that gap is coming, because also more and more banks are structuring themselves in order to enable this. And not only banks, I mean, before there was Saxo presenting this. Saxo did this beautifully, right? Being a broker, and they say, okay, I'm going to power fintechs. So they created the infrastructure to be the backbone of these fintechs and do a part of a market that they would have not served, right? That's the future. The sooner the banks get there, the more they were going to be able to leapfrog, literally, and get market shares they might not be able to reach or achieve.
True. And what are the basic solutions that fintechs are providing to the businesses?
Well, in our case, as I said, we open you a wallet. You can start transacting, giving card products or products that the banks traditionally are not able to serve. So, for example, a multi-user experience. How many employees in a business have access to the banking application? 1, 2, maximum 3. They go through a very tedious process. KYCs, it's clunky, it's paper-based because business banking is way behind retail banking, right? So if you start providing an experience which is software-wise at a layer like where ERP is, where you have all your employees on the application, right? So I have my sales executives, right, that have a PIMO card, and they can go around, go to an event, spend, and whatever. With a bank, I would never even think of doing it. So accessibility onto pieces that the bank will not be able to do. Why? Because, you know, they're not structured for that. They maybe don't see the value. And that's where we basically close the gap.
Or a future where PayMo powers those rails. You can issue your card, but on his platform, so people can use it and transparently see all their expenses.
Regulation permitting, of course.
Exactly.
Regulation has been a key theme today. Any other questions? Okay, great. Well, thank you so much, gentlemen, for joining me on the stage today. This will be on the Situation Today podcast as well, so looking forward to that. And yes, thank you for joining us. If I could please have a round of applause for our two gentlemen on stage here.
Thanks for having us.
Great, thank you very much, everyone. So that concludes our activities for today. Thank you so much for joining us and for hanging on until the end here. And we look forward to seeing you at our future Golf Business Breakfast briefings next year. We're actually planning to have 5 business breakfast briefings next year, so there'll be more on the way. And please visit golfbusiness.com to find out more and subscribe to our newsletter and all our social channels, and we'll keep you posted on that. Thank you very much. That's it from me, the Group Editor at Golf Business, Gareth. Thank you.